Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:12 p.m. Eastern Standard Time on a rainy evening here around New York City, New Jersey waterfront. It's February 25th, 2018. Almost at the end of the month, given the fact, is it February 28th or 29th this year? Is it a leap year or a regular year? It is a regular year. Month ends on the 28th, which is Wednesday, and a brand new month begins on Thursday. Full disclosure, this is purely for financial education, not for any solicitation or advice. This particular free market webinar is open to all members, and for anybody out there who has access to the internet, I highly suggest that all of you go ahead and spread the word so that anyone can come into the YouTube channel, which is under Clueless Trading, listen to some of the fantastic video casts, forecast things that we do, and the free ones are always available to people who have a desire to understand more about what's going on and hopefully make a little bit money and a lot of money and minimize their losses during very difficult times and move on. So and I request everyone to go ahead and tell all their friends and anyone who is somewhat involved with the US stock markets to listen to the real story, not the fake story of what really happens out there. And all that is available for free on the free webinars, on videocasts, I should say, on the Clueless Trading YouTube channel. Okay, so that mini marketing pitch is over. And the second marketing pitch is I highly encourage and request everybody to provide referrals, give us shout outs on other trading platforms whenever they have time. And if they are happy with something, or they feel that my hard work has benefited them in any way, or at least they have, well, that's what it comes down to, benefited them in different ways, then a quick testimonial on the website on clueless8.com is also requested, because that is basically the organic marketing that we do. And when people come in, they can read that, they can read your feedback. None of the testimonials are ever censored or filtered, and they are just posted once they appear. And I would certainly encourage everyone to do that, to put their thoughts and feelings of what their experience has been with Clueless Trading. So, on that note, you have two charts in behind you, which is basically what the markets are, which is S&P 500, and behind that is the S&P 500 futures, which are the proxies and the actual roadmaps of what the markets do. By concentrating on these extremely powerful precision tactical charts, structured charts that I produce, you actually have a road that you have a GPS that will navigate you and hopefully take you to your desired destination, long or short. In this particular case, mostly long. And these are extremely important. I don't want to keep on harping about it, but if you are not understanding or tracking these tactical charts, you are just another lost babe in the woods, and the wolves are out there to get you. And they get everybody, and they get some people consistently, because they are trading prices on individual stocks or the market, and they have no idea what the roadmap looks like and how they can get out of the jungle or the trap. So that's what it really comes down to. So a couple of broad points here. Since the two major, I would say, extreme short and intermediate term bottoms, which were put in place on the 2nd of February, and I'm sorry, the crash actually began on the 2nd. The two major bottoms were created on the 6th and the 9th. And the 2nd of February and the 5th, the 2nd, 5th, and the 9th were the three major dates. Okay, here's the 5th. Here is the 6th. This was after hours, obviously, and I think this was after hours, if I remember correctly. Let's see. And then you have the 9th. Whichever the case, all my members, I have been guided through every one of the drops and the Reflex-Bounce, which is in progress, and everything that I talked about, and are validated by the previous forecasts and everything that's put out there on the YouTube channel and on my real-time Twitter feed, you can clearly see that everything that I talked about, where the markets are going to go, is happening. And one of the things that we're going to look at today in very simplistic terms, because simple is what is difficult in life, I guess, because most traders and human beings don't have common sense. And because of the lack of that common sense, especially when it comes to technical charts, they falter. And these webinars and the private advanced coaching sessions are designed so that they don't keep on stumbling. So on that note, we have a couple of broad points on the market that I want to make. Number one, the reflex bounce is on. The massive correction that occurred, 12% plus, and in the individual stocks, in many cases 15%, 20%, was caused. And I don't want to keep on repeating myself. I've done those videos which clearly explain what the reasons were. But in some very simple terms, it was a huge, complicated derivative bet known as the vol trade. Vol doesn't have anything to do with volume. It has to do with volatility. And that volatility trade, where they're all cramped into one small room, shorting billions and billions and billions of dollars worth of the VIX on a macro derivative trade, a complex model that blew up when the VIX spiked. Well, the VIX didn't spike. The VIX was a consequence of this massive hedge, massive shorting of that instrument through certain ETFs. The VIX jumping from 11 to 50 is not something that happens too often, okay? In fact, it never happens, or especially over a matter of 2 days, or 48 hours, or 72 hours. So it happened because so much money was put in there, leveraged money, in other words, borrowed margin money. And this is not mom and pop. These are macro hedge funds, especially the small and mid-size hedge funds. And many of them that you will never hear of blew up, just blew up. It was nuclear Armaggedon. Okay, and when they blow up, the explosion has a mushroom effect, just like a nuclear bomb or a hydrogen bomb, and it hits all other areas of the market. And all of a sudden, it seems like, oh my God, the U.S. economy is in deep trouble, and Donald Trump is going to be hung in public, next week, and all that garbage. And the media and analysts on Wall Street, and of course the retail traders, all look for a reason why everything can go wrong. Well, everything didn't go wrong. In fact, everything is going right. Now, as a tactical trader, we're prepared for any event that comes. And the fact is that my particular, especially these very precision videocasts, talk about what the upside is, upside can be, and also explains in technical terms what the downside can be. So you know where you stand. You know what to expect. Even though it doesn't feel good when you're a long position and you wake up in the morning and futures are down 20 and you're like, what the heck happened? And that's just standard procedure. I'd like to, basically announce a huge piece of news. Get used to it. Volatility is going to remain enhanced. It's going to trade between levels. The VIX will trade between 15 and 20, or maybe 20 or 25. But at this point, between 15 and 20, generally speaking, that's the band. It's no longer going to be all the way in the single digits to 10, where the VIX was stuck. But just in simple terms, the volatility aspect of the market, as in intraday 200-point pullbacks and 200-point rises. Case in point, multiple cases in point. Look at Friday. Look at Valentine's Day, the biggest gift that I gave you guys. Okay, when the markets opened down 250 Dow points on the CPI news. That was 2 Wednesdays ago. And I said, you know what? I looked at it. I looked at the subcomponents, and that's part of my job to do. Analyzed it quickly in my head. And I said, nope, that's not a permanent inflationary components which are moving higher. It is the rent part, housing rent part, and auto insurance. Looking at that, I was dead right. The market turned around, and net from top to bottom, bottom to top, was up 400 points. It was a beautiful day. Same thing on Friday. So bottom line is that those analysis and stuff, many of you are very smart. Maybe you guys see the same thing. I don't know. But leave that to me. That's my job to do. That's the type of call that a macro fund manager managing billions of dollars will make at 9:32 in the morning, and I made it at 9:37 a.m. in the morning on Wednesday, on Valentine's Day, and his traders basically go to work and just bang, bang, bang. Money goes in and buys that tactical dip. In our case, it's our own trading books. So in your case, if you didn't act on it, I'm sorry to say, it's very sad. It's very, very sad that on a day like that, and I'm not talking about just one day, but that was a monumental day when I make that type of call, and I give the reasons why. It's not just like, okay, buy it. I'm actually putting out there why I'm buying it, the reasoning behind it. And if traders didn't react and made all kinds of silly excuses, they didn't have time and stuff, which is not true in most cases, they can easily look at that, read my comment, put in a trade, buy an SPX call. Trust me, excuses will get you nowhere. And traders in general, retail traders, like I keep on saying, are full of excuses. So I'll leave it to them, what they need to do. All right. So these type of monumental calls in these highly, extremely volatile markets have to be taken advantage of. And if you don't take advantage of them, I repeat, it's very sad. Like good old Donald would like to say, tragic. All right? Very tragic. These are markets which are going to be on enhanced volatility. Expect massive intraday volatility. And what that means is that watching the prices alone is not going to take you anywhere. The structured charts that I put out there, and I'm not making up these stories, okay? Because you guys see it every single day, every single week. The structured stuff that I put out there, I take a naked chart and I dress it in the finest clothing, in the form of trend lines, in the form of patterns. And it's not just on the market, it's also on individual stocks. So if you have just somewhat of a discipline, and everyone does, everyone is a lot smarter than they are. My father used to say that, and God bless his soul, he died passed away many years ago. He goes, just use your brain a little bit more. And in the case of trading and investing, it brains plus grit, the two main ingredients that built the United States of America. So if you consider yourself a real patriot or American, well, use your brain and take some risk. That's serious. Maybe that should be a measure of your patriotism. Okay? Because America was not built, and I'm very passionate about this stuff. The United States of America, the finest nation in the world, no question about it. And believe me, I've been around, and I know. Trust me. Many of you haven't even crossed the borders of America. Maybe you went to Mexico and got drunk, or went to the Caribbean and lay on a beach. But I've traveled the world extensively, and I know. We have our faults. We act like idiots many times, in many circles, in our lives as well as in our political circles. But we still get it done. So it's time to wake up, guys, ladies and gentlemen. Okay, it's time to wake up. Take some risk. Understand the technical aspects of what's going on, and go with it. Don't just sit there, because the perfect moments ever are those ultimate moments on the 2nd of February, at the end of January, and the first week in February. Those are the perfect moments. They're the most difficult moments. I know that. We all got hit. Even though we did intraday SPX trades where it went from $4 to 90. Make it up. It's a fact. I don't think anyone caught it from 4 to 90. I delivered it at 4. I didn't hold on till 90. I didn't know the markets were going to have a flash crash of 1,600 points as the vol trade or the volatility trade blew up that afternoon. But we got a good deal in the middle, and you could always jump in and out. Because when you see these type of candles, what do you do? Oh, I'm going to just buy here because it's all of a sudden going to turn around. There's nothing here which tells you that's going to turn around. There is no reference point. So waterfall declines. You make some profits, and you say, whoa, this went up from 4 to 7 in like 2 minutes. Okay, take some money down. Get in there again. You got to play the momentum. Same thing on the upside. So, broader points. Read the articles that I put out there on the weekend. It doesn't matter whether it's with my family, whether I'm out there doing stuff, personal stuff. I'm always have an eye on what's going on in the financial markets through the different financial news outlets. Read what Warren Buffett had to say. Warren Buffett's words are powerful. He is still an American icon. Till some idiot comes out and says that Warren Buffett is a non-American. I'm sure somebody's going to say that someday. I'm sure somebody said that about him. He's the ultimate example of success in American business, just like many others, like Bezos, like Bill Gates, and so many others. But he hits middle America, and he basically talks straight. Read what he said. And one of the key lines that you get out of it, he said the markets are not overvalued. Didn't say the markets were cheap. He said a lot of things are expensive. He's got what, like something like 200 or 300 billion or something like that lying there, and he's looking to make a huge deal. And on top of that, his second biggest position is Apple. How sweet is that? For a guy who says he doesn't understand technology and missed out on the biggest runs on the Amazon stuff, we should regret it. And he says that's the biggest regret in his life. Second biggest position is Apple. So there's a good sentiment in the market regarding coming up with somebody like Buffett, because Berkshire Hathaway released the results like they always do on a weekend. And very, very powerful results. Part of it was tax benefits, but that's okay. So, second thing, we have the government bond yield basically hovering between 2.85 and 3%. We're going to quickly take a look at it. And as I'm talking to you guys, I'll just keep on switching the charts so you don't keep on looking at the same screen. So the TNX, or the 10-year government bond yield, is like I said, it's going to hit that level, and it's going to create a small handle before it moves higher. And it is going to move higher. But as long as it's a gradual move higher, it's okay with the markets. The markets can handle it. The markets can handle slightly higher interest rates. What's the big deal? The US economy had the biggest run-up between 1990 and 2000. Well, interest rates were substantially higher. So what, interest rates going up a little bit higher is just going to completely kill us? No, but the initial shock of it going higher is what hits the markets. So just watching the 10-year yield and then, oh, it's creeping up a little bit. Notice something. The markets don't care. They do care. They do care, but they're not dropping like flies just because the bond yield hit this 2.945 level, which like I said, this is pattern one. This is pattern two completion, and we are going to go to about 3.04%. You don't need Jeff Gundlach and what's his name, PIMCO's Bill Gross to tell you that. You heard it here first. I said that like months ago, if you remember, that we are going to head towards that 3%. Look at the pattern. You don't need to be a hardcore bond analyst, but then look at the same time, look at how fast and furious it's moved away from its moving averages. So that standard deviation, or the deviation from the highway, remember the highways are these 34 and the 50-day moving averages. The standard deviation is substantial. So it's going to have a reset. And that reset is not going to make it crash and burn and bring it down to 2.5%. That reset most probably will bring it down to about 2.7%, maybe 2.7%, maybe 2.6%. What's that going to do for the markets? It's going to make the market surge higher. And we're going to talk about that, how far the markets can go. Everything is correlated. So broader point, a good feel, a great statement from the legend Warren Buffett. Bond yields are starting to ease back a little bit. You can start to see that. You got to zoom in a little bit more. And you start to see that it's starting to create a consolidation channel, which will bring it down towards my structured levels that I have in place. This was the rising wedge that it basically busted a move at the end of January that caused a monumental fallout because everybody thought this was going to happen, or the markets thought this was going to happen, and that caused a fallout on the VIX. Whoosh, The VIX just went to Mars and causing a ripple effect and collateral damage across the board, causing the bears to come out of hibernation. They're not in hibernation, they're always there, and to proclaim that the US economy is finished and that we are going to be done. Good luck. They just got singed, impaled, decimated, shot in the head. Facts. You can be a bear, be a tactical bear. You just can't be a dogmatic bear. Dogmatic bears, since 2009, since the last 30 years, 40 years, the story of the US stock market has been a bull market. The story of our lives is a bull market. Otherwise, you'd be waking up every morning thinking you're dying every morning. Do you guys believe that every morning when you wake up, that you're going to die every morning? If that's the case, you're truly, yeah, exactly. If that's the case, that's the same thing with trading and investing. If that's the case, then you're a dogmatic bear. And there are people like that who are who live in a life of misery. What's the term? Misery loves company. Go to a bar, sit with them. There's always some miserable guy who's going to sit there and tell you his life story, why his wife left him, his dog left him, his cat left him, his gerbil left him, his kids left him, and why he's sitting there drinking. Do you want to hang out with that type of guy, or do you want to be at Clueless A Trading, talking positive within a framework of being realistic? Think positive, for God's sakes, because some of you are just pure negs. And if you want to lead your life with a negative thought process all the time, number one, don't invest, don't trade, don't believe in the United States of America and its inherent strength, despite all our deficiencies and idiotic things that we sometimes do. Just go away. Seriously. Doesn't mean you have to be stupidly optimistic all the time, but you have to have a positive bent. On that note, corporate earnings are running at a clip of almost 80+% of the companies that have reported so far. This is your 10-year bond, by the way, just for anyone who doesn't know what they're looking at. And you can start to see that it's probably going to create a small consolidation channel, as I explained. So anyway, going back to corporate earnings, and I put those numbers up. Please scan those articles. It takes about 3 minutes to read. And if you're a speed reader, it takes about 45 seconds. If you're a slow reader, it'll take you 5 minutes. And it's probably one of the best that we have seen in years. And why shouldn't it be? There's synchronized global growth. The world population is getting bigger. We're selling products overseas, our aircrafts, our technology, our financial services, our biotechs, which are the finest in the world. No one can touch us. No one. We do lack in certain fronts, no question about it. But those leading industries, defense, forget about it. We make the best JDAMs in the world, the best missile systems in the world. And we sell it to anybody who wants to pay us. We don't care. That's business. The Ruskies try to beat us in defense for so many years. They're not even close to us. The Chinese rolled out a Lockheed stealth fighter similar to ours. Within the first 2 days, it had mechanical problems. Good luck. Are they not smart? They're very smart. Do they have the type of technology we have and the type of engineers? All stripes, colors, and brain, because we are into brains. We are not into who's white, black, yellow, orange, pink. We're into brains, guys. When you lack brains, your color of your skin doesn't matter. Develop some brain cells. Okay? So bottom line is, we're the best. Corporate earnings the strongest, running at an average clip of 20% plus a year, unheard of. What, all of a sudden everyone's just stopped, just their productivity is just going to go down and Boeing's going to say, oh, I'm going to make a crappy plane next year. Just for the heck of it, because I've been making so many amazing stuff that I'm just going to make it really bad aircraft, bad Boeing. No, it doesn't work like that. So that's a real big plus. Interest rates are a worry. We do not want runaway inflation. Well, so far the reasons I've given, and then some of the stuff that you guys have also read out there, we don't have runaway wage inflation, and I've explained all that in the previous webinar. If the average wage inflation component part of the U.S. business jumps up 30%, workers are going to be extremely happy. Markets are going to be extremely worried because that's going to cause overall inflation, causing prices of goods to go up, and a decrease in purchasing power of the U.S. dollar. That's going to hit many consumer sectors like housing primarily, and that's obviously not good. But that ain't happening. It's slowly happening. Okay. So inflation is under control, but we have to keep a very keen eye on it. Let's talk about overall sentiment in the market. Overall sentiment in the market is bearish. Mom and pop took out, as I mentioned before, and as you guys can read from my articles that I posted out there, at this point, probably $30 billion. $30 billion. They don't want to look at stocks. They're like, this market, no way. And in the meantime, they're going to Walmart and waving a couple of American flags. Good luck. To me, true patriotism, being a true patriot, is to support American business, to support U.S. financial markets. Our financial strength, because we are the dominant financial power in the world, is our biggest strength. Our military is our biggest strength. But just military blunt force doesn't make you powerful. American business makes you powerful. So if you just want to wave a little flag and scream some, slogans, good luck to you. In the meantime, why don't you go buy some real American company stocks? But mom and pop's not going to do that. And neither are some of you guys. Because you're too scared that we're going to just crash and burn every day. Good luck. Okay? So the overall sentiment in the market is not extremely, but I would say extremely bearish. Because $30 billion went out, and the only time mom and pop after many years was somewhat excited was on January 1st, when we took off. Right there. Okay? This is the NASDAQ. But anyway, so they decide to all pile in here. Good luck. We knew exact levels where the market was going to go, and please feel free to review those. I don't make these things up. And where we were going to have any substantial pullback. I am on recorded webinars saying we would have 1,000 to 2,000 pullback. Yes or no?
Yes.
Did I think it was going to happen in 2 days? No frigging way. But was I right? Absolutely. Am I super excited that it happened in 2 or 3 days? Absolutely. How would you like a 2,000 point drop in the market over 3 months? Oh, you wouldn't like it, because every morning you'd wake up thinking, oh, here we go, let's play Apple again. And that pain of the thing not just dragging on and on would eventually wear you out. Get it done with. It was a traumatic blow overall for the financial markets. We had the roadmap in place. We said where we can basically drop to. It fell below that. We hit that 2,500 mark or so on the futures. So for now, it's over. Now, is it possible we go and do a triple test? Anything is possible. But we're looking at the game of probability, what is possible within a framework of probability. It is not probable unless we have some other hidden volatility type of blowout, or in the high yield credit market, something is brewing. We have no idea. It is not totally possible for us within a short period of time, meaning like within the next couple of weeks or so, or maybe next week or whatever, to test that level. But it can happen. But we can't live on what can happen. We have to live with what is happening and project it. We have risks in the market. There's no question about it. But we have more positives. But ask a bear, they're going to give you, ask Zero Hedge, they're going to tell you. Zero Hedge, by the way, are some of the smartest guys in the world. But they are constantly, since 2000 and whenever, and believe me, I know who these guys are, okay? Telling us that the Fed's going to blow up. that Janet Yellen is going to drive the economy into the ground. And many of you were in the same camp too back then. Yellen did a phenomenal job. Now we have another fantastic person by the name of Jerome Powell. So if you want to live in a conspiracy theory world that the Fed is basically going to completely demolish us and all those things, and listen to radio shows which basically tell us that, we are just one fake paper tiger and all that stuff, well, good luck. I can't help you with that. Like I say, go, book yourself a Dr. Phil, or go drink yourself into a frenzy at your local pub. Talk to the guy who says 9/11 never happened. And that it was all a conspiracy theory. Yeah, sure, okay, that's great, love that. But I'm not going to entertain that stuff. So that you can't change that. You can't change a mental person. So I'm not here to change mental traders, okay? But neither am I that simplistic to think that everything happens without manipulation. The stock market is manipulated, guys. Welcome to life. Life is manipulated. The stock market is nothing but a reflection of your life. Complicated. Manipulated. You got to fight for what you want. That's it. So, going back to the circle again, sentiment is very, very pessimistic. That's a very big positive, because a substantial amount of money, trillions of dollars, again, is sitting in cash. Which brings me to my next point. Warren Buffett, and read that, said one of the most dangerous investments you can make is, what did he say? Did anyone read it, or anyone know what he said is? What mom and pop thinks is the safest investment in the world is what?
Oh, bonds.
Thank you.
Bonds.
Thank you. Bonds. You say bonds, and automatically mom and pop, which is just a pseudonym for the average investor, thinks, oh, it's very safe. Oh, I'll buy a government bond. It's very safe. Oh, good luck. Warren Buffett is telling you, which I said months ago. And I ain't no Warren Buffett, I'll tell you that. So, that the bonds are the most dangerous things right now, because yields are rising. Yields are rising. So let's take a look at the 10-year again. So if bonds are the most dangerous things, you can find huge values in stocks. You have to look for them. We have selected stocks that we trade that are going bonkers. We had stocks that went up on the day the markets crashed. So where do you think that money is going to go? Just completely into cash? Yes, initially it's going to go into cash. I mean, the bond money fleeing the bond market. It's just beginning. Trust me. And then they have to look for an asset class they want to move into. What are they going to move into? Gold? A little bit. What are they going to move into? Bitcoin? Doubt it. They have to move into value stocks, or stocks which hold value. And this is your long-term picture of the bond market. So basically, going up to, let's say, this level here, 3.8. Remember, you have to move the decimal one to the left. 3.8 or 4%. That's doable. It's doable. What, 4% yields are just going to completely kill us? No, but if it does this and creates a massive bullish candle, then yeah, we're going to drop 1,000 points easy. But that type of move, this little candle that caused the calamity in the market, this little one, okay, this little one, oh boy, where's the little pen? Okay, this little one that caused that thousands of points down on the market, creating havoc. It's not, we got to watch out for those things. But that didn't cause the issue. What caused it, I want you guys to be very clear about this in your head, is the blow up on the volatility trade, that crowded trade, which in my opinion was the ultimate cleansing act that happened in the market. It cleansed out froth. Okay? So just the way when people take on too much margin, and Warren Buffett mentioned that too. He's very old-fashioned that way. Never borrow money to do, market, to invest in the markets and stuff like that. That's fine. Some people would like to disagree with him. You can borrow limited amounts to do it within reason. Hedge funds borrow 10 to 20, 10, 15 times the initial down capital, right? The leverage. So for every dollar, they might be borrowing $9 more. I mean, that's a lot. So point is that washed out. That excess at that froth in the market washed out. I didn't even know that these funds had this macro derivative model that was so short the vol, so short the VIX. So that obviously came as a big surprise to all of us. Well, they do stupid things, they suffered the consequences. So there you go. Go, like I said to them. I mean, like I would say to those funds, go away. Just got blown up. Good luck. Bye-bye. So that was a good thing that happened in the market. There are foreign risks that if yields keep on rising, it pressures. One of the things that I want to mention is one of the consequences of foreign markets, especially emerging developing markets, which are the fastest growing markets in the world. So a lot of Southeast Asian markets, Latin American markets, some of the fastest growing markets in the world. When yields are rising, remember they're borrowing a lot from the world, their foreign debt, which they are borrowing from to fund their operations, fund their growth, are denominated in US dollar. The US dollar is king. Okay, so they're not borrowing in Chinese yuan, believe it or not. They're not borrowing in Putin's ruble, even though they're probably doing a lot of business with Russia, and Russia's probably selling them more arms than they ever saw. So bottom line is that they are borrowing in US dollars because the debt is denominated in US dollars. So when yields are rising, the cost of them servicing that debt rises sharply. Any of you who have, this is very easy to understand, but some of you who are in business understand this very well. If your debt is denominated in dollars, then all of a sudden you're paying a lot more because interest rates are rising on the debt, right? And your currencies have to depreciate. What's known as currency depreciation. Your own currency. So I'm going to put your national currency, whatever that currency is depreciating against the US dollar. You understand that part? In other words, you're paying more for every US dollar. You got it?
Yeah.
So if X country, let's say country X, okay, let's say country X borrows $1,000, okay, and it costs them in their local currency. Let's say it costs them whatever their local currencies are. It costs them 5,000. That's their own local currency. You have to make up a symbol to look like it. Let me just make up a symbol like that. How about that? Okay, I can't make one. So then all of a sudden, their currency depreciates, and they basically that $1,000 that they have to repay back is a lot more. So their currency maybe goes down to, against the US dollar, maybe goes down to just giving a hypothetical example, to 6,000. So for every 6,000 Rwand or whatever, I'm just making up a currency, they have to basically pay, they have to depreciate their currency, and that hurts them. That's why it's such a dangerous thing for emerging markets. But emerging markets know very well that the Fed is very aware of it. What the Fed does with interest rates here, which is a gradual approach that they're doing, and they've always done that, they're not just looking at the US economy, they're looking at the global economy. Because if the global economies start to get hit, that's going to hit us really hard too. So we're all kind of tied in together. So that's the broader picture. And the other stuff that I put out there, read on it so you remain a little bit more educated. Okay, now let's start looking at charts, and we look at a couple of stocks and all that stuff too. Futures are down about 4.5 right now. There's no news or anything, it's standard procedure. And it's actually, why is standard procedure? I'll tell you why. Because you've been looking at my charts, you would know it. We hit the first level right there, which is 27.54. Guess what the futures just hit when they opened? and when they were up 6.5.
I was just looking at that.
27.54.
Yeah.
Exactly.
Yeah.
It's not rocket science. So the answer to that question, I think some Mike asked that. Futures dropped. Any foreign news? Yeah, I'll give you one foreign news. It's called crude SA trading precision levels. I'm dead serious. It's all technical.
No, I agree.
It's all technical. Now futures are down 3. So I know you agree. I'm just saying. So that's the news, okay? Because we predict the news. There's an old saying on Wall Street: by the time the news is out there, it's done. But that's a good question. Yeah, there could be some news. China could be like, oh, we're going to do this, boom, for, futures would be down like 12. Or Putin says, that's it, I'm going to kill more US soldiers. They did that a couple of months ago. Horrible stuff. Because there are huge numbers of Russian mercenaries who are fighting with the Assad government in Syria. And they literally, and then we bombed like 60 of them, which I think was the best thing we did. They went in and they basically killed our Marines. There were 4 of them who died in a firefight because the Russians attacked us, because we were helping one of the rebels rebel groups fight against Assad's government. And I'm supposed to like that guy? He doesn't give a crap about us. He's using Donald like a fine violin. He's a bad guy. And he's killing our boys. And we're sitting here saying that he's a good guy. Horrible. He's killing our boys. And then we went and slashed their mercenaries. 60 of them. We bombed them out of the craters. But they stayed quiet because they don't want to tell the world that they're fighting there with the butcher, this Assad guy. Seriously. It's not hidden news, but they stayed quiet because then it'll be revealed that one of his biggest oligarchs he runs one of the biggest mercenary companies, mercenaries for hire. Russian military guys are like really, really well trained, right? And they're sadistic. Before we won the war in Afghanistan, right? I'm talking way back. We fought the Russians.
Mm-hmm.
We fought the Russians. What the Russians did in Afghanistan, that legacy still lives on. That Taliban and these a-holes who basically dominate parts of Afghanistan are a result of the Russian invasion. And we basically obviously supported the Taliban and stuff initially because we gave them all the arms and stuff to fight the Russians and did a pretty good job. But then they turned against us. But the point is, they're sadistic. They don't care. They did horrible stuff. I've good Russian friends, believe me. I know all this stuff very well. Even they were just like, whoa. And the result of that is a bunch of hardcore Islamic terrorists who don't give a hoot. They're like, they fought the Russians like rabid dogs. And with our help, they beat the crap out of them. And now they're fighting us. Well, a section of them. So I'm telling you. Anyway, I don't want to get into that stuff. So bottom line is that, but anybody who kills our boys, I'm sorry. I have what love? That's one part I detest. So anyway, after they did that, just so you know, last thing I'll say, we went in and we attacked this little town where these mercenaries were fighting, all these Russian mercenaries were fighting, and they don't have names, they have numbers. Because the Russian government never was to say who they are. And when they come back to their country, dead bodies come back to Russia, they don't name them. They just go by numbers. So nobody knows, who they are. So we went in there and our boys flushed them out, and I think 60 or 70 of them were blown out of the crater in one night. So we got. So who's the big boss there? All right, let's move on. So bottom line is this is the daily chart that produced the phenomenal results that we've been producing over the last couple of weeks. Okay, since the drop. So you have 2 massive hammer reversals. It's always good to review and learn. So even if you SOA'd and got out of trades early or whatever you did, there's always an opportunity. So at this point in time, you look at the symmetry because the daily charts on these candles show you a very, very clear picture. Now, every time these candles developed, and this is a very simple thing that all of you need to understand. Every time these were massive hammer reversal. I mean, these are like hundreds and hundreds of points, right? So every time they go higher, what does it do the next day at the open or during the day?
Resets.
What does it mean in simple English? They do what?
Pulls back.
Pulls back a bit during the day, right? And that pullback freaks the living daylights out of a lot of you. So I'm going to draw this in simple 4th grade. I'm going to use 4th grade crayons here, okay? So let's start. Big hammer reversal, high of the day, pulls back a little bit. Normal standard procedure. Why not? Because huge profits on these things. You don't take it. And again, you are trading against the machines. And by now, all of you have accepted that. Many of you didn't accept that before. Now you know fact that there is very little human involvement. And all of a sudden, CNBC is uttering the same words I've been using for years. This is high-frequency trading, robotic markets, these algos. Laughing. We've been talking about this for years now. Now the acceptance has come. Good. Finally. So it goes up. The next day, either it opens down or during the day opens up and then pulls back. Then turns. Creates another high. Sells off within the last half hour a bit and closes at this level. In hindsight, you get to see these candles, right? Next day, it either opens down all the way down here or opens up and then pulls back and gives back a good portion of the previous day's gain. Do you guys see what I'm talking about?
Yes.
Exactly. You see, and I'm going to keep on going, but let me take a quick break here. Candles don't grow like this. Oh, I'm up 200 points. So right from 9:30 in the morning, I need to be up another 200 points. And the third day, right from 9:30 in the morning when markets open, I need another 200 points. Guys, wake up. Because that's what a lot of you guys think. That the pillars of these massive multi-hundreds of billions that went back into the market, trillion went back into the market, tactical trading are supposed to be built pillar on top of pillar? No. It's going to go like that. Then it's going to zigzag. It's going to pull back a little bit. But it's going to keep on moving higher. And this simple full stochastics that I have been begging you guys to keep an eye on. And I know many of you do. And honestly, some of you who are not, I have nothing to say. I will just say the same words that my good boy Donald says. So sad. So sad. Because if you can't even read the frigging the stochastics that a 4-year-old can look at, the stochastics are going higher. And now they're starting to get overbought. Because we are within reach, and I'm going to get there. And I've already explained that. And some of you already know where the short-term overbought condition will be. So if you just follow the stochastics, and the same thing shown on the Thinkorswim charts, the same thing on the quad algo HFT charts. So you just have to follow what the internals are doing and keep an eye on the shape of the candles. And I'm real time updating all of you every hour, every 15 minutes. Lately, if you noticed, I don't post that much in the chat room. Because as my good friend Trent has advised me to do, he's my personal advisor. Half kidding, but Trent and me did have a good talk one day. He goes, don't babysit to the point where people are just going to be so reliant on you. I said, you're right. I want people to rely on the unbelievable content that I'm producing, not on me and my in-the-face posts in the chat room. I'm always there to answer things. That's fine. But not like change a diaper 10 times a day because the market's pulled back 30 points. And I think it's helping some people because self-reliance is the key to success and welfare is the key to ruin. especially if you're an able-bodied person willing to work. Okay, so it doesn't go like that. So it pulls back. The next day, it has a massive pullback, and it tests the middle of the. I mean, it tests the mid Bollinger, or yeah, this. It's not really a mid Bollinger, but it tests that Bollinger level. Look at that. Now these are tricky while it's happening during the day. I admit that. But if my other charts are showing it's just a 1 hour reset or a 4 hour reset, and the overall trend is good, and the daily, this is the daily. Remember, this is what keeps you in a trade. This is what says, okay, I'm going to take some profits in the morning when it gaps up, which I always say, big gap ups, you sell a whole bunch or sell a whole lot, and then you can always re-enter. I do that. So, but you stay with the over the directional trade, which is a long bias even now. So bottom line is that it pulls back, and it's and boom, maybe by 2 o'clock, look at what happens. Oh, of course. What day was this? What day was this? Because I gave you guys a huge gift for the ones who took advantage of it, and I know many of you did. Valentine's Day, my sweethearts. That was my Valentine's Day gift when the CPI number came out at 8:30 and the markets went down from up being 150 Dow futures points to down 200. Anyone remember? Anyone remember that day? Yes? No?
No,
Maybe.
I wasn't in the room. No.
Yes.
Okay, you don't have to be in that room. Why do you have to be in the room to figure out what we're doing at Clueless A Trading? Were you not tracking the Twitter feed at the end of the day, middle of the night? Why do you have to be in the room? So, who's that, Scott?
Yeah.
Okay. Why do you have to be in the room? That's another good point that you brought out. The chat room is meaningless. The content is delivered on the real-time Twitter feed. That's where you should focus, your energies on. Oh, I wasn't in the room. So who gives the flying hoot if you're in the room or not, or anyone was in the room or not? It's not meant at you, Scott. I'm just saying. Focus on the real-time Twitter feed. The room is, that's why I'm going to be there in the room. I'm watching. I got 14 screens, and one of my vertical screens is half of it is dedicated for the chat room and stuff. So I'm seeing everything. But why the heck do you have to be in the room to know what's happening in the markets the way I'm showing the charts? Do you all understand that?
Yep.
Exactly. So I'm not picking on you, but you made a very good point here. Maybe that's part of the problem that you're encountering, and not sticking with trades and missing out on humongous trades. And we talked about it, and I know you're taking the right step forward. Okay? The room is meaningless. The room is there for general banter, great ideas that flow out of members sometime, me answering questions. The room is not giving you the real money-making content that I'm delivering, because, on my alerts and the markets. So end of story. And that applies to everybody who says, oh, I was in the room. So who cares if you're in the room or not? You got a real-time Twitter feed that you can get on any mobile device in hand. I don't care how busy you are. You don't need to be an active trader during the day. You can set out some swing trades, which have been the biggest winners, especially from these levels. So when I hear people say, I can't actively trade, it's really difficult for me. Okay, great. Another beautiful excuse I should just hang on my walls here. Just sit there, do the swing trades. Let the market do what they do, because these things are telling you the market wants to go higher. So markets don't build on each other like building blocks. Okay? Markets basically do a volatility building block. That's what they do. That's why you look at these charts that are available on an iPhone, on your Android, on your Samsung or whatever. Anyone using any other phones, to just dump it, burn them, and just buy an iPhone, okay? How about that? Samsung, stop supporting Korea, support America, all right? Dead serious. Samsung should be banned out of here. I sound like really hardcore, but seriously, they're great phones, I know. But just buy an Apple iPhone. How about that, okay? Show your patriotism instead of just waving a flag. So, I'm dead serious. Dump your Samsung. We should have a Samsung burning day, okay? Seriously. And look at Apple stock go, all right? It'll be up $50. I should maybe start a movement. Burn your Samsung. Buy an iPhone right now. Buy an iPhone 7, 8, 9, 10, 11, 12, whatever is there. Just buy one. Because if you don't own an iPhone, you're not an American. How about that? Actually, that would be a powerful movement, man. Seriously. Because we don't need Samsung here. We have the Google Android, which I don't even know how that phone works, but it's supposedly a great phone. Just buy an iPhone. Support America. That's it. Okay. So anyone who has a Samsung right now, I highly suggest by tomorrow morning, return it, break it, burn it, and just buy an iPhone. And I'm dead serious. I'm not laughing about this. Okay? And I can assure you that your experience with the iPhone and the applications that come, the apps that are created for the iPhone, is far superior than the apps that are. By the way, who creates apps for the Samsung? They use Android apps? I mean, what's the operating system in the Samsung phones? I'm sure some of you use Samsung phone. What's the operating system? Do they have an app store? Android store, right?
Yeah, the Android, yeah.
Okay. More reason to dump it, burn it, break it. Okay? Because no Android app. No, I'm dead serious. No Android. I'm dead serious. No Android app comes close to an iPhone app in speed, efficiency, accuracy. Don't believe me? Put it side by side and do it. You can trade your whole trading book off an iPhone. I started posting pictures of the Thinkorswim iPhone. You get options charts, one click, boom. I don't know what Android does. So, okay, I made my case to burn your iPhone. All right, let's move on. So, bottom line is we are at the first level here. So, it doesn't build. There's a lot of volatility. And that volatility is really annoying, guys. And I don't like it. It's like chop, 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 like boom, this and that. But I stay focused because I'm following multiple charts and I'm seeing this trend in place. So just be prepared for that. In general, when it comes to trade management stuff in these volatile markets, you get substantial profits within the first hour. We positioned ourselves the previous day. Don't just sit there. Take the frigging profits down because they go away within 15 minutes, right or wrong. Right? Now, that means on the high momentum stocks, high beta momentum stocks. On the swing trades, you got to keep on building that position. Because when the Wins of the world and the Chipotles of the world and the VMWs of the world or the Blues of the world or the Sage Therapeutics of the world and those type of companies start popping hard, you won't have time to buy them. And they have popped hard. Look at Chipotle, $800 stock went to $260. We bought it back around $290, $280. Frigging thing hit to $320. Big money trades. So those are different types of things. But I'm talking the high beta momentum, the Apples, the Teslas, things like that. You get a big profit to take it down because then so these type of pullbacks. Anyway, we had a consolidation. Once we got towards the upper end of the range, and I've walked people through every single one of these levels, just go through that. Just go through my Twitter feed. So anyway, and now we created a consolidation. It lasted 3 days. That kept like, oh, it's going to go higher. I kept on saying this mid-Bollinger, this line, this is real simple stuff. This red line is an extremely powerful resistance. So 3 days, it tried to move his neck up, tried to do that, and it went straight above that. It looked really good. Boom, gave everything back. Then it came down and tested the gap. Remember, this is the gap. This is the beginning of 2018. So this thing is this is not the gap. I'm sorry. This was the beginning. Yeah, there is here's the gap. That's why I drew it. I knew I wouldn't draw a gap if it wasn't a gap. Then I'd be doing some fake stuff out there in my charts. I don't want to get in, I don't want to start doing that. So just a reminder. Dump your Samsung, okay? All right, just move on. So bottom line is, here's your gap. So it came back, and guess what it did? It tested the gap. These things, are just picture perfect how these machines work. That's the only reason, aside from the few brain cells that I have left in my head, is why my charts are so perfect. Only because the machines move within geometric and symmetrical fashion. So you have a broad channel here, a broad channel. So it came and filled the gap, took off. On Friday, market did nothing, like Trent pointed out. It's just like, look at that. And it's just boom, all of a sudden at 2 o'clock goes off. I knew they were going to go. I didn't know it was going to be up like, how much was it? Like 347 points or something. But I knew it was going to go because my algo charts were showing that it was attempting to break out and kiss and break out and then really kiss hard and break out and settle above the fill in the gap. Above the what? Above the
weekly.
Oh, come on, please, somebody give me a right answer. The 50-day moving average.
Yeah, but it did close. But it did close above the 50 on the weekly. Not the 50, but
no, it closed.
I'm echoing.
Please.
I'm echoing.
I'm probably closing. I don't know. I mean, I know it closed above the 50. Let me see if it closed above the 50. 1 second.
On the weekly chart.
Oh no, I don't know what you're looking at. Seriously.
The weekly.
No, it's not. The weekly S&P. I'll show you the charts because you just gave me a crazy answer, so I can't explain that to you unless I show you the chart. Okay, please. We did not come close to the weekly S&P 500 even during the crash, and I'll show it to you. Please. It's the daily that we're focusing in. Please. The daily, Nicole. If that's you. Is that Nicole?
It's me, Frank.
Okay, fine. Excited. Very excited. Okay. It's the daily we're talking about. The daily. So anyways, I'm done with the chart here. So this is the first level. So we are getting up there right now. So expect this is a major sell point. So it's going to be a major resistance. And at that point, you're going to get a pullback. And that pullback could be very well 100 to 150 points. And it's going to be fast. But once it hits the pullback, it should hold this one. Please, somebody mute the microphone. Thanks. So, please, somebody just mute themselves because there's way too much noise going on. So, bottom line is that it'll pull back. It'll happen, but that pullback can start from where we are right now, or most probably will start at 2762 or so on the E-minis. And that pullback will be quick. It'll be sharp. It could be an hour. It could be an hour and a half. And we want this channel to hold because when this channel holds, it creates kinetic energy like a slingshot, okay, to boom, do this. Sometime by the end of March, we are going to, or maybe before that because things move too fast these days, we are going to test the upper Bollinger at 2820 to 2843. It's going to happen unless all this hard work is detoured down and we break below this gap again, in which case we will test these levels. That is a low probability, but it is possible. But otherwise, we should be able to bounce off these levels if we slip below this, for example. That's why these lines are drawn, guys. These lines are not drawn so you guys can look at it and they say, oh, nice lines. Yeah, lines are drawn to make you guys money. It's not that hard, okay? You follow the line and it says 27, 26. So you tell yourself, okay, it can pull to 27, 26. If it gets there and it's starting to create a green candle, my alerts are always going to be there. Then you're going to buy there. And if you go from 27.26 and it bounces up to where we closed at 27.53, what do you think your options are going to do? If you get a 25, 27 point move on the S&P 500, what do your options generally do? Come on, guys, are you guys real traders? I mean, or am I just
about 100%?
More than 100%, dude.
Yeah, well.
Yeah, they go up now, but you're close. Yeah. It's done between 100 and 200%, depending on how much what your thing is, time value left is. Like on Friday, our options went from 4, which I told people to buy the previous day when they were at 2. But let's say on Friday intraday, the options went from 4 to 13, right? I'm 4 to 14 actually. How do I know? Because I did it. How do some of you know? Because you guys did it. How do some of you have no idea? Because you never did it. It's pretty simple. So anyway, if you get a move of, you're going to make about 100, 150%, if not more. You don't want 100, 150%? Okay, fine. It's okay. It's fine with me. So that's it. Now let's move into the S&P and talk about what our good member here, Nicole, was misreading. Okay. Please don't talk right now. Let me just do this, Nicole. I know you're excited, but just let me do this. 1 second. And with all due respect, this is one of the only charts that you guys need to follow, really, aside from the other charts. This is your S&P 500. This determines your happiness, your moods, whether you're going to yell at your partner, husband, wife, whether you're going to be feeling sick at the end of the day because you did stupid things, or whether you want to quit trading and never make money in your life. This is the only chart that determines that. So why do I draw these lines? Because I'm drawing these lines because this is the 34-day moving average. So I match the line color with the 34-day moving average. Don't believe me? Well, let me give you a peek. Look at that line color. Orange, the line is orange. Simple? Simple. I'm going to make this real simple, guys. Here's your red line here. That's your 50-day moving average. So I draw a line which is red. So you say, okay, that's the 50-day moving average. Tell me if this is hard, if anyone needs any explanation on colors and lines, okay? Now, let's draw another line here, which is the blue one, which is the 20-day moving average. And I'm sure you guys can see this. And people who use Thinkorswim, which everybody should, just the way everyone should use an iPhone, everyone should have a Thinkorswim account. You can easily see that on your screens too. So we are going to now pinpoint the 20-day moving average. Change 20-day moving average is blue. We're going to find the color blue. Bingo! What high technology. We actually matched colors. All right, guys. Seriously. Okay, so we matched colors. So now we know what's going on. Oh, we missed another line here, which you guys should never, ever miss. Because if you're an active trader, you better be kissing and, excuse my, we're all adults here, right? So I can say this is kind of like, you know, direct. Well, you should be sleeping with the 5-day moving average. How about that? Okay? Because the 5-day moving average is your best trading buddy ever if you're doing short-term trades. And that applies to stocks. And it applies to markets, which is SPX and all that stuff. Okay? And I've said this a zillion times, and I'm going to keep on saying it a zillion times. The cup and handle, you guys all see that. That's great. I'm happy that you guys can actually see what the cup and handle looks like. Now, let's draw another line to meet our trading buddy, short-term trading buddy, which we should be dating. Not on Tinder, but on Clueless A Trading. Okay? And that's your 5-day moving average. So the 5-day moving average, ladies and gentlemen, right now is 27.20. Your 20-day moving average is 27.25. The big daddy of all moving averages that everybody is like, oh, we need to close over the 50-day, which is important. That's one of the oldest technical analysis tools, the 50-day moving average, that hasn't changed. I have tuned so many moving averages and looked at the 150, this and that. But the 50 is the 50. Don't mess with the 50. Okay? Over 50 is good. Below 50 is bad. It's that simple. It has never changed. All right? So, the 50-day moving average is currently at 2730. Does everyone see that? And of course, it changes during the day because it's a weighted moving average over the last 50 days. So as we are climbing higher, the 50-day moving average will slowly climb higher. It's not a static number. So 2730. So what did we do on Friday? We slammed through. We went bonkers through the 50-day moving average after attempting. We broke the 50-day moving average. Look at the date below on the 16th, 2 days after Valentine's. We closed above the 50-day average on the 15th. On the 14th, this was your Valentine's gift. On the 15th, there was a minor pullback and then a massive reversal hammer. So let me zoom in. And here's your red 50-day. So the 50-day was doing fine. And then we basically busted a move on the 16th. What day was that? We busted a move on the 16th, Friday. Not last Friday, but the Friday prior to that. And we hit the downward sloping 20-day moving average and puncturing through the 34-day moving average. Guys, this is simple. And if you don't understand this part, I beg you, do not be a trader. I don't think any other service will tell you that. If you don't understand this very powerful and simple method of trading and maintaining your trades and understanding the directional flow of the market, do not be a trader. Please, at least don't be a trader here. Because I don't know. This is the simplest way of looking at it, guys. Just the way, quick reminder, dump your Samsungs, all right? So just the way you're going to do that by tomorrow, you'll know how to read a chart. So we bust a move and we hit the downward sloping 20-day moving average. The 20-day moving average is a very powerful line because it encompasses how many weeks of trading, guys? Quick. I need a quick answer. The 20-day moving average takes into account how many weeks of trading?
20.
Oh my God. You guys are really good. Come on, guys. The 20-day moving average takes into account how many weeks of trading?
4 weeks.
Thank you. 4 weeks.
I was waiting for somebody else.
I know. I love these webinars. Hey, 1 + 1 = 2 or 2.5? I say 2.5, guys. Okay? Jesus Christ. Come on. Wake up. There are 5 trading days in a week. 3 days in the bunker and 2 days when you're awake, right? So maybe for some people it's a 2-day trading week. Like 2 days they peek their head out and say, oh my God, market's up. And they never buy the lows. Well, forget it. This is not, I'm not their service. So, all right. Real traders, real people, we live 5-day work weeks, 5-day trading weeks. So 20-day is 4 weeks. Thank you very much. Now that we have that major mathematical riddle out of the place. Okay, so bottom line is that we basically hit the 20-day, which is a very powerful line. And guess what we did? We kept on failing. We failed here. We failed here, as we didn't even get close to it. And we failed on the 21st, which was Wednesday. Now, throughout these failures, I just don't look at a candle. I look at the overall, structure. I kept on saying it's a consolidation channel. My charts are there. It's your job to basically follow them. I said it's a cup and handle. And I kept on saying that these stochastics show no signs of weakness. I don't need affirmation from you guys because I know what I did. So even though you could be trading intraday and taking profits down, you generally want to keep that long bias because nothing changed underneath the ocean. And that, ladies and gentlemen, is the biggest deficiency of 99.9999% of the human trader. The price format is all they're looking at. They don't like it that their P&L is red at the end of the day. Who gives a frigging you know what? Because it's an opportunity to dollar cost average, bring up your few calls that you had, or if you had one, you can add one more or add two more. Stick to the discipline of looking at what the internals are doing, and I'm showing you the simplest internal. Look at the pattern, the cup and handle, and there is an element of luck involved. There's every element of luck involved everywhere. But luck is the preparation. Luck is the result of the prepared mind. Right? Exactly. The stock market is not luck, guys. It's an element of luck, but you have to be prepared. So if you think this is a gambling casino, well, then please go away. This is a real business. I'm not talking real estate trading. I'm talking trading. Treat it like a business. Not like, oh, I'm just going to toss a few coins, and if it hits, it hits, and it doesn't hit, it doesn't hit. That's not what I do. That's not what you guys should be doing. But if you'd like to do it, hey, it's a free country. You know, in the meantime, definitely burn your Samsung phones. All right, so let's move on and get a new iPhone by tomorrow. And if you don't be waving a flag. All right, seriously, wave a Russian flag maybe, or a Korean flag. All right, end of story. Somebody's going to call me racist or whatever, and I get sued. Okay, I love all kinds of people, guys. And in New York, we like to say we're equal opportunity lovers and we're equal opportunity haters, okay? We hate us ourselves, we hate everybody else, but we love everybody and we love ourselves. How about that? That's how you do it, all right? New Yorkers actually don't hate anybody. I'll tell you that for a fact. So, saying all that, the fact is that now that we have seen, Nicole, now you know, like I said, we were you said, so this is your moving average, okay? So the next level of contact, before I show you the weekly, we never came close. We came close, Nicole, during the crash to the 50-week moving average. We never even kissed it. The futures did, but not the S&P 500 actual. So this level here is your 34 moving average, and what's that number? 2753. So we actually hit that tonight, right? We were up about 6.5. Now futures are down about $1.50. So we hit the 34-day moving average. And what happens when you hit a major moving average? You get some sell programs. So that's what happened. All right. Now, saying all that, we are coming into a resistance zone here, and that is on the S&P 500, which is going to affect all your trading, because S&P 500 generally tends to move when the Apples and the Boeings and all these guys move, right? So everything's correlated. So indices are not built on thin air. They're built off baskets of company which are inside them, correct? Mm-hmm. So yeah, S&P 500 didn't just appear like from nowhere. And it's a basket of companies. So all of a sudden, if you see a big Apple sell-off, which will never happen if you burn your Samsungs, and then the Boeing or Caterpillar or U.S. Steel or Walmart, which got smashed, and we were still up that day. And I think the market actually went up that day. And these major companies, which are in the S&P 500, they make a material difference. So this is the level where the market basically broke the downtrend, uptrend. Remember this line that I had drawn? Let me go back a little bit. This is real important, guys. So let's do the daily. So there was a downtrend line that I drew from August. If you guys remember, some of you who are really focused on technicals will remember I compared this, the internals hit the vicious lows. I mean, ugly lows, like minus, what was the low on the full stochastics here? Can somebody tell me by looking on the right-hand side?
6.37.
Thank you, sir. 6.38. Yes, these are just like I'm not even showing you the McClellan oscillator. That was like minus 400. I'm like, whoa. And I knew that we were going to have a vicious bounce, a reflex bounce. I don't know if it was going to stick. It went up, then it pulled back, right? We created two major lows. 2 days we hit that 2,500 level, and then we bounced. It doesn't show here because this is S&P 500. But when we look at the futures, we see this, we see this. You get it? Because the futures work overnight while you're in your jammies sleeping, right? So futures are globally correlated. SPX only trades during market hours. That's the reason the SPX does not show you where we were during the night. So anyway, bottom line is, it is simple. You get these type of lows. I don't care if it's a dead cat bounce or, I always ask myself, right? As I mentioned it before, we got three beautiful cats. Who the hell came up with the term dead cats bounce? Do dead cats ever bounce? I doubt it, because cats generally, I had a cat fall on my patio once from like 7 floors above, and it was just like bounced, and a big smile. I mean, seriously, cats have 9 lives. So who the hell came out? It must have been a real dogmatic bear, or maybe it's Putin, because he probably shot cats, or I don't know, maybe the Samsung guy. I don't know. I got my targets today, right? So I'm gonna keep on saying that. So dead cats don't bounce, all right? Dead humans don't bounce. Maybe dead gerbils bounce. I don't know. So the point is that that's what the market calls it, a dead cat bounce. Must have been a real animal hater who made that term up. So when you get down towards these levels, you buy. And then you see how the market reacts along the way. So the next time we get to that level, and I'm sure it's going to happen, you should prepare. That is the most aggressive buy point and the most inconvenient one. You just don't feel good. And the market chops around, for a day or two, or maybe 2 days, and then boom, just goes. Every single frigging time. Not even once has it been wrong. So anyway, and there are other indicators too, but this one happened real fast and furious. We found out the reasons why, that there was no real credit crisis, whatever, and, the market went. But even now, if you look around the other trading forums, they're calling for another 2,500 retest. I'm sure it's going to happen. I don't know. Actually, I'm not sure it's going to happen. Because I've said it before in one of my webinars. We get a 12% correction on the Dow Jones Industrial Average. Don't expect another one in 2 weeks. All right? Seriously. So it gets down there, and this got down exactly to that level, and it kept on going higher. So always track the daily to keep your mind set in the directional bias movement. Always look at the 1 hour and the 15-minute and the 4 hour for your tactical trades, but the daily will keep you in the ultimate swing trades. Okay, so saying all that, we know what these levels are right now. So let's look at the weekly. And this is a pretty damn good looking chart, if you ask me, because I'm looking at it from a technical standpoint. Somebody looking at this will say like, oh no, whatever. I don't really care what other people think. You know that. So I'm going to draw one more line here, and that is this, guys. And lo and behold, that takes us close to the highs. So I'm going to make a projection that if there's no major credit situation developing, we're going to make new highs in the market. And mom and pop is not going to be around. And I say, okay, bye-bye. All right? We're going to make new highs in the market. Most probably, if there is no major hit to the U.S. economy because of some hidden risk that we don't know about. Am I clear on that?
Yeah.
Exactly. So get ready, guys. And it's going to happen fast. Just the way this happened fast and this happened fast, it's going to be fast. Now, what are the conditions technically that need for that to happen? And these you guys will follow as I put the charts up. You guys will look at it and say, okay, I know what I'm looking at. That's the biggest thing. You got to see a little bit of what I am seeing. And don't worry about what these idiots are saying. And some of them are not idiots. Some of them are very powerful. Because I respect both hardcore dogmatic bears who can make a serious point, not just blabber on. And I like a hardcore bull who can make a serious point and not just blabber on saying, oh, we're going to buy every dip, it's great. That's like an idiot you do not want to listen to. There has to be a reason. Here is the technical reason. Real, sweet, and real simple. 27, what is the moving average here? 27.53. If we bust another candle move, which we need to in order for this reflex rally continuation, which culminates at a major critical point, and it's shown on the chart. Can somebody tell me the short-term culmination of a move, let's say for the month of March, which is generally a good month, by the way, is where? And it's drawn on the charts. So you're looking at it. There are two levels, actually. One I haven't drawn, one it's already there. Come on, somebody tell me.
2,800?
That's right. That's right. 2,800. That's your first level where, and why? Look at it in very simplistic terms. That's when the crash began. Right there. On the 2nd of February. That's when the crash started. Till here, the market was just creating a bull flag. And then bang, bang, bang. Okay? So the first bang that was the onset of the crash is going to be of major resistance, which also happens to be this lovely white uptrend line, which was broken. So when two of these things meet at the same spot, you gotta basically take down and probably just go. I don't know. I'm not going to make that a projection because it's probably going to blow above that. I'll tell you where it can go and overshoot. But at that point, you want to take down a substantial amount of your long positions. You understand what I'm saying? Exactly. So bottom line is that if I draw this acceleration channel, the acceleration reflex bounce channel, then that measures up to 2050. That is the gap that I hadn't drawn that I will do right in front of you. There. Bingo. That's a gap. That's a minor gap and the beginning of the Armageddon crash. That was Armageddon, by the way. Okay? So bottom line is this gap gets filled at 2840 to 2850. Understood? And that is roughly 100 points from here, correct? Yeah, a little bit more than 100 points. And that is also, if you want to look at pattern completion, the cup handle, the breakout on Friday. So basically zigzag its way up here. Pattern complete. And then the market will see, okay, do I need to make another excuse to fall? So it'll probably create a sharp pullback worth about 300 to 400 points. And if it does want to take a new high, it will basically bust a move again and take out and hit 2,900. But that's asking quite a bit from this point. You understand what I'm saying? But this is where the market's going. So if you got 110 points on the technical charts, on the bullish side, that is roughly 600 plus Dow points. That brings us back towards 26,000 on the Dow. And the idiots on TV and all your friends who think we are finished and the US markets, that's what I hear all the time. Oh, markets, okay, are just going to sit there, make no money, and you know what? They deserve it. And by the time they get back in the market, they'll lose money again. And guess what? I know I sound tough, but who cares? They deserve it. Because now is the time to make money. Now, that's a bullish view. Let's talk about the bearish view. Bearish view. Boom. Wake up tomorrow morning, futures are down 40, and the next crash has begun. Don't believe me? Can happen. I'm like, I'm positive. How about this way you look at it? And Tom knows me really well, swimming the market. I'm positively paranoid all the time. I don't expect anything good out of the market. And when something really good happens in the market, and we are basically trading this market like a robot, right? That we know. I thank God and I say thank you very much. Thank you for a great day. You say your prayers, okay? But I'm positively paranoid all the time. Do I feel like crap sometimes? Absolutely. But I turn that into a positive stress. There's negative stress and positive stress. Stress is actually the biggest motivator. I don't know if you guys know that. Maybe you guys were born with a silver spoon in your mouth. You never knew what stress is. But stress is a very positive motivator. All right? And as a trader, really, really successful traders over the years, not in 1 month or 2 months, maybe some of them do, take a stressful position and turn it into a powerful winner. And volatility forces you to do that. Volatility, ladies and gentlemen, forces you to do that. If you want an easy ride, you will never make the big money. Write that down. But I actually make it too easy on a lot of my trades, So I shouldn't say that. But in general, if you personally, as a personal challenge, want to make the really big money, it's always going to be hard, just like in life. But my service puts all these powerful alerts, the short-term, fast-moving burst trades and stuff, and those make big money. Melly, case in point. 40-plus point turnaround. Overnight, opened up at 359. And I'm looking at my screen. Hold on 1 second. The stock was like, okay, here it is. 356 was the low of the day, went to 390. 34 points. The calls, forget about it. Forget about it. Some of you did, some of you didn't. What can I do? I gave the trade. It's still going higher. Okay? So the calls basically turned around, I believe, from $7 to 26. End of story. So that's what volatility does. So at this point, let's look at the negative side right now without harping on that. Negative. Negative is first line drawn. And of course, I'll be putting up this chart tomorrow too. But you guys should write this down somewhere. This is what we do not want to cross. 26.95. And we're testing that, right? 26.95. More importantly, this is the line we do not want to cross. And that is the downtrend line. Remember, this is the downtrend line, right? So if we break below the downtrend line, is basically 26.75. It's actually here because now we are here. So I'm going to say here. We break 26.70. There's a high probability, ladies and gentlemen, we're going to test this uptrend line again at 2600. That's a lot of money to be made on the short side. So you got, that's why we follow charts. Because if this all of a sudden turns around, and what I would really like to see, which I was explaining earlier before I got sidetracked by the Samsung story, which is a reminder, dump your Samsung, Samdungs I call them. So bottom line is that this moving average, the 20-day moving average, which is 4 weeks worth of moves, has to turn around. And in order for it to turn around, a little zigzag here and there, this candle has to remain intact over the 2720 mark. Okay, and bottom line is that if we need another big fat candle, otherwise the 20-day moving average is not going to turn around, and that will not be good. Do you understand what I'm saying? The 20-day moving average has to turn around. So for the bulls to continue with the reflex bounce. We don't need futures up frigging 30 points in the morning, because that means you won't be able to buy anything the whole day unless the futures pull back. We need futures up a little bit. We need a little zigzag in the first part of the morning, and then by the latter part of the day, we need a boom move. We need, hopefully, to close above or at least kiss the 34-day moving average and stay above it. Doesn't mean the end of the world if it doesn't, but I would like to see the candles remain somewhat green, or if it's a red candle, it has to be an inside day. An inside day basically means a big fat candle like this, and then a red candle which is just inside that candle. Get it? So if Monday's an inside day, that's fine. Don't freak out. These have to remain directionally higher, because short term we're overbought. I'll show that to you in the 1 hour and 4 hours. So we could easily have this stuff. Or we need a little pullback and we close higher end of the day, in which case, ladies and gentlemen, it would be really positive. Now, over the next couple of days, we need to create another big candle in order for the 20-day moving average to turn higher. And that will solidify the move towards the 2800 level. In the meantime, these are the levels we're watching. 2675. That's almost almost how many points? 25 and 47. That's 71 point. That's a 400 point. If we drop from here to here, that's 400 points on the Dow. CNBC will go wild again with bearish stories. They'll trump out the bears. They'll pull up George Soros type of guys who say the U.S. economy is finished. You get the standard bears coming out. You know they do that all the time. You know, that's for ratings, right? They always bring out some guy who's super bearish on the market. He'll make a powerful case while the market's at down 700. I mean, 300. So what does mom and pop do? He turns the TV off. That's it. I'm never buying stocks. Good. And we get excited. All right. So bottom line is this 400-point drop, if it does happen, has to hold the downtrend line. That's it. End of story. Now, let me show this, and so that Nicole, please see this carefully. This is your picture of the market on a weekly. Okay. And the weekly 50-week moving average still beautifully trending higher, and even but on the S&P 500. After hours did come and test the 50, but as you can clearly see, you must have been looking at what weekly, I have no idea, but we never went below the 50-week moving average. Okay? So I don't know what you were looking at. All right? So,
no, Frank, all I was trying to say was that on the weekly chart, I was hoping to go over the 10-day moving average.
Over the you mean over the 5-day moving average? Okay, I'm sorry. I don't do 10 days. I do 5 days. So I'm a 5-day kind of guy. You're a 10-day kind of gal. Okay, how about that? I mean, I don't do 10 days. I know 10 days are used. 9 days and 10 days are used, but I just use the 5-day because I like to keep the picture in a volatile, very heavily volatile market. I keep the picture very short term. Okay, so I can see what's happening closer. But 10 days, fine. 10 days, totally fine. So here on the 5-week moving average, we are just slightly above it. Now here's the negative on the weekly. Okay, this hasn't turned yet, and this will only turn once we bust a move over. Over let's say 20 as we get closer towards 2800. This is the weekly chart. So the weekly chart has not done a crossover up yet. We got to watch this. It never hit rock bottom, and that's a positive divergence, but still it hasn't crossed over yet. So like I said, as tactical traders, we're aware of, whatever. We're not just buying into the thing. It's a one-way straight train up. I'm just showing you the levels that we have 200 points here, 150 points there. And that's how you play. There is never a all clear sign. Okay? There's never an all clear sign to go buy the market. Is there? I haven't found it. The only all clear sign I get is when we get these 1,200 point drops. Is there an all clear sign? Like, like these idiots keep on saying, oh, well, we don't have an all clear sign yet, as if the market raises the green flag and says, buy me. By the time you do it, they slam it down. It's unbelievable what these guys do. So that's basically it, guys. The real picture in the market. Follow this range chart for active traders. This has been a beautiful chart. You can trade every candle on this if you're active enough and have the luxury of looking at your screen during the day. Okay, so far so good. Overbought, but we, believe it or not, I expanded the range a bit, right? So now the upper end of the range is 2763, which translates into 2767 or 2768, guys, on the SPX. So we closed at 2747. This is your short-term picture for the next 24 to 48 hours. 2747 was Friday's close on the S&P 500. SPX. This is real easy. 2763 on the futures equals, add like roughly 5 or 6 points to it. So let's call it 2770. All right? So this is the upper end of this beautiful box that I keep on showing. Because the box was lower, but it busted and moved, so I moved it higher a little bit. This was the onset of the massive crash. The Niagara Fall, like, somebody slips over and falls and see you later. Actually, a lot of people have fallen over the Niagara Falls. This is a fact, by the way, and they all survive. You know that, right? You guys do know that? Does that make you guys happy? Okay, no one wants to answer my question. That's good. No, it's true. The fact is, people think if you fall over the bridge in Niagara Falls, I don't know if you guys been there, it's absolutely amazing, that you die. And you actually don't. Okay? I think the only people who have died is died of a heart attack as they're falling. But the people who actually fall down there, they actually survive. Just like the markets. This is the Niagara Falls. Okay? And you dip and you survive, but you know what you got to do. So, and I'm not kidding. So basically 2763 translates into 2770 on the SPX. We closed on Friday, so I'm going to put Friday here. What's the difference? How much will the Dow go by? Quick, you guys should know this by now. If we move to the upper end of this range, this is range trading. Okay, upper end of this range, how many points is that? Quick. And I'm going to just put you guys all in remedial math class. Okay, how many points is that?
About 140 maybe.
Oh, yeah, you could. Okay, the S&P points is basically 23, right? So 23 times 6. More like, let's take the lower end of the number, which is around 130, right? So basically from this teeny little candle up to the upper end of this very formidable range is 120 Dow points. And thank you for that, Cole. So 120 Dow points. 120 Dow points can be had in one single day in a few hours. And we are overbought short term. So I'll be pointing that out. And you guys will know what to do, because this was the start of this was not the start. This was the real leg of the monumental crash that we encountered. Correct? This happened back on the 5th of February. And these are futures. So this started in the morning when overnight when the futures started dropping. So now we are getting back up there. So we basically have short term, within the next day or so, we have 120 to 130 point move on the upside, and bang, they'll sell the market. Okay, so if we have nice little profits on some fast moving stocks, not talking about the swing stocks, and they probably will remain untouched, but then you need to be aware of it. And the way you're aware of it is you look at this picture. Now, I call this the bear kill zone. If we bust a move, which is highly likely, we bust a move over the 2763 level, then this sell, see that sell? will be replicated as a buy. And that's why I call it the bear kill move. This is going to happen very quickly. It could happen between 2 and 4 o'clock in the afternoon. It could happen overnight, but it's going to happen very quickly. Once we get above the 2763 level. And then that's what the bear kill zone is. You're going to see some, you're going to see some selling again, because that'll approach the 2800 level. That's how your P&L will look like. It's not going to be straight line up. It's going to zigzag, but this chart is very important. So when I post it, take a quick glance at it. It's not hard to see. Upper end of the range. We generally tend to bounce when we get oversold right there. Fast stochastics. That's why I put these blue arrows. Okay? Any questions on this chart? Because this chart will keep your profits in your pocket, in cash. And if you don't follow this chart, you're going to give back all your profits during the day. Telling you right now, especially if you're trading some, tech stocks. And I've always said this. Am I clear on this? Yes? No? Maybe?
Yes, Frank.
Okay, good. Any questions on this chart? Because this is the active day traders chart. It's a 1 hour chart constructed to perfection. And it basically moves accordingly. This was the highs in the market. That was the big channel. I said we would get into it and we would basically go nuts. It happened. We went above the channel. We consolidated for a bunch of days and we busted a move on Friday. Now we are hitting the upper end of the channel, which will be hit 120 points or so, 130 points higher on the Dow. Don't get overexcited, please, because at that point, you're going to see a slew of automated sell programs that's going to hit the market hard. Doesn't mean we're going to crash and burn and you're going to fall over the Niagara Falls again, because I think people who have accidentally fallen over the Niagara Falls tend not to do that again, right? So all kidding aside, you don't repeat the same mistakes. So markets don't like repeating the same mistakes or whatever, the same event. They'll do it a little bit differently. So what you will get is a fast moving sell-off like that once you get towards this level, and then that could be the impetus. This is an uptrend line. You see that uptrend line is around 2732. It'll probably pull back here, but that's what it's done. These are like perfect hit points. You buy some calls there, boom, you double your money or triple your money, whatever the case, depending on how fast they move. That's how you play the tactical side of the picture. Short term. Long term, we already talked about it. And this long term chart, we already talked about it. So any other quick questions? Because I wanted to give you guys kind of a roadmap as precise as I've done. Futures are down about $1.50. I don't trust futures anymore. Okay, I used to trust futures years ago. But now, because of the automated Globex systems that are just randomly nuts overnight, like I've said, I could wake up tomorrow morning with futures down 20 and I'm ready for business. And you guys should be like that too. As long as the chart structure does not change. The chart structure changes, you change your mindset. The price structure changes a bit for an hour, 15 minutes, you do not change your mindset. That's how it's done. Any quick questions? I'm ready to answer. Nobody? Okay. Good. Mr. Swimming the Market, any questions?
How about Tesla?
Okay, let's take a look. Let's look at a couple of quick charts. The sexy part of the business, right? The indices and all that stuff, that's like, even though they're big money trades, they're not as like, they're very technical, and some people are like, oh, it's so boring. Like I could never, like, I tried explaining the SPX and stuff to my wife, and she's a very smart lady, and she just said, are we going out to dinner? So that's what happens, all right? So it's not, it's like, gotta be excited with those numbers. So Tesla. Tesla is at a major pivotal point here. They're very easy, not easy. I never use the word easy. Shame on me. Tesla right now is destined for 360. You see that? Right there. Now, the quad charts that I show on Tesla are showing higher numbers, and I can show you higher numbers on Thinkorswim too. There is massive accumulation in Tesla. Internally, the stochastics are just going SpaceX style, higher. Now, there are a couple of reasons why that's happening. Tesla apparently made some announcement that Model 3 production, and they have already contacted customers saying they can take delivery and stuff. Which basically for the guys who are bearish on Tesla are saying, oh, hold on a minute here. They're actually going to produce those cars? Of course they're going to produce the cars. If Elon Musk has to go inside and work 29 hours a day himself, roll up his sleeves, he's going to do it. He's going to make sure the Model 3 production ramp is done. I know it because it's too much at stake. Even though it's a money loser for them, who cares? But it's the prestige of doing it because the bears, he won't make the bears small. So the other reason Tesla's moving is SpaceX. I've already posted that. Mike Pence announced while he was in Cape Canaveral when SpaceX Falcon was taking off that, and Trump has already announced that he's looking to privatize the space aviation business. Lovely. Lovely. It's fantastic. The biggest players in the space aviation business, Boeing and Tesla, SpaceX. I've said that last year. Remember, Tom? That what if they spin out SpaceX as a separate division? Tesla stock will be up 200 in 2 days because they will unlock huge amounts of hidden value if they and even announce or a rumor or he tweets, hey, thinking of spinning off SpaceX as a separate company. Holy cow, Jim Chanos will be broke. Okay, so watch out for that. He ain't stupid, and Wall Street ain't stupid. On top of that, their battery grid system that they were testing out in Australia, in a remote part of Australia, was hugely successful. Remember, he put a bet out that if he didn't finish it in 100 days, he would give $100 million to that territory. I mean, to that city. Guess what? He finished it in 80 days or less. Like I said, I don't even like Tesla cars. Okay. Don't mess with this stock. So, saying all that, do I think it's going to be going $400? I don't know. But here is I traded on a very tactical basis. This is a good looking chart. It finally broke out over the 50-day moving average, which happened on the 22nd. Which was, what day was the 22nd? I'm losing track of days here. Thursday. Okay. So once it busted a move over the thing, it actually went above the 50-day moving average on the 16th. Then pulled back and was trying to break below that, and then the 5-day moving average moving higher. Technically, it's in picture-perfect condition. Picture-perfect condition means that it's going to hit a major resistance level where the stock has faltered at the 360 level. So the best way to play Tesla is quite simple. You buy close to the money calls, you trade them as they go higher, and then buy a little further out as it moves forward. 360 is the first level of major resistance. Okay, if it breaks over 360, which is a possibility, and I can show you that on the weekly, then the stock will basically hit its highs at 390 very, very quickly, guys, because there is no reference point here. And this, in other words, this was all sell-off, right? So once it breaks into this vacuum, it's going to move very rapidly. So it is the fact that it broke above the 50-day is a very big plus. The fact that it's attempting to break over the downtrend channel is very important. This is fine. Volume accumulation, very good. Positive notes coming out of the company. Oh, on top of that, I forgot, their semi-truck business. DHL CEO said that he's looking to buy a lot more. Come on, this is DHL, guys. They ain't your local grocery shop saying, I'm going to buy a Tesla truck. This is DHL. On top of all the other U.S. trucking companies who have expressed interest and have put down money. Gotta watch out, okay? So if it goes, it goes. And let's look at the weekly. Look at the hourly. Looks great. Large inverse head and shoulder. Walked you guys through it. 331, 351. There's your. But Tesla's volatile, right? For no reason, it'll be down $4 just to get you out of the trade. So you gotta, you gotta manage your trade. I really can't teach you that. You can buy a little bit, then you can sell if it jumps up, and you can buy a little bit, and then if it slips a little bit more, you add more, as long as the chart structure does not change. Look at that. There was a sell program at the end of the day. They brought the stock down like 4 points. That's standard procedure. So there's your shoulder. Best buying opportunity again. I mean, I'm long Tesla, but seriously, on a pullback is your head, left shoulder, right shoulder, 330. Tesla, whatever it is, should never break 330 in the short term. Tesla in the short term should not break the upwardly rising 345 and 342 50 SMA on the 1 hour charts. It breaks these, it's going to fall rather quickly to 330. I hate trading Tesla because every time I've really done that, I probably won twice out of 10 times. I don't like shorting the stock unless it's a real breakdown like this. Okay? Because of market conditions. Because it'll burn you. Okay? So that's it. That's your answer to Tesla. 360 is the mark we're looking at. Trade it in 5 to 6 to 10 point increments. Very powerful move on Friday, despite the fact that even it was up a lot even when all the texts were red. Remember, there's a lot of money flowing into it. I'm going to cover any other stock you want me to look at, Tom? Just quickly while
No, I mean I've seen all the charts over the week, so I'm pretty secure there.
Okay, sounds good. Anyone else? I'm going to show you. Go ahead.
Depot. Home Depot. Just a quick.
Home Depot.
Check on it.
Yeah, sure. 1 second. There's strong earnings. Let's look at the daily on Home Depot. It's actually a very good looking chart. It's actually, the answer is self-evident. Home Depot wants to go and retest the 50-day moving average. So here's your 50-day moving average, 191. So you got a 3-point move in there for options. That's a lot of money. The downward sloping 20-day moving average is at 190.40, right? So that's going to act at major resistance. So the minute it hits 190.40, you're going to see sell programs come in, whether you like it or not. Now, if it busts a move over the blue line, which is the 20-day moving average, it will go and hit 191.50 around that level. And if you notice how Home Depot's chart looks just like the S&P 500 chart? Anyone notice that? Except the S&P 500 is around here, and Home Depot is trying to get there. So Home Depot has work to do. There's a lot of potential, but it is not. Technically, it is a good buy. I don't know if it's I would just trade it for exact trade levels. That's it. If it fails again at the 50-day moving average, they're going to slam the stock hard. They're going to bring it down, straight down towards 186, 187. Okay? Because this is known as a bear flag. The stock is attempting to recover within. This is what a bear flag looks like. A stock falls really hard, like it did, right? And then it starts to move higher. But this is known as a bear flag, okay? And a bear flag generally does this. It breaks down again and retests these lower levels again. I doubt it because I think the earnings were strong enough to solidify a bigger move. But in order for the bear flag to be negated or decimated, you want the stock to break out over the 191, 192 area, preferably 193. So 4 or 5 points from here. And if it does that, the stock is going to regain back that 200 plus level very easily. But in order for it to do that, it's got to create a big fat candle above the 192 area or so. But I will cover this stock tomorrow. I actually haven't traded Home Depot lately, so it's good you pointed it out. I think we have potential to move up at least 3 or 4 points, and that's quite a bit. For Home Depot, options are real cheap, right? So if you're trading options on Home Depot, you got a home run at least towards the 50-day moving average. Got it?
Yes.
Okay, so it's a good trade on a short-term basis. But in order for the trend to turn, the stock has to break out over the 194 level, and that's when you see some real big money flowing into the stock. The big money, generally traditional fund managers who don't, a lot of fund managers don't even look at they think technical analysis like some voodoo stuff. All right. So bottom line is they will buy this. They'll be like, oh, it's above the 50-day, time to buy. Seriously, these idiots do that stuff. So the minute it crosses over the 50-day, you see further buy programs come into play. Price line is coming up. This is for big boys, big girls, little girls, everybody. It's a widow maker. I wouldn't recommend traders who don't know how to deal with volatility. Price line will either be up 200 points, 100 to 200 points, easy, or it's going to drop 100 to 150 points. Given what I see on price line on a daily and on a weekly basis. On a weekly basis, I believe, and I'm going to go all the way out. I'm going to go 10-year. I'm going to remove all the lines. And I'm just going to give you my opinion. My opinion is that the stock has a low of 1,831. Okay? 1,830. The stock can drop just like that in like 3 minutes. Right after earnings. So that's what? That's like 70, 75 points. Remember, the stock was just 2 weeks ago, and we issued the buy alert at 1,700. It's already up 200 points. Price line is at a major inflection point, and I'll show you why. This would be a huge money maker, and the best way to play it is through a straddle. You buy calls and puts. I'll put the strategy out. You can do some other complicated stuff like sell puts and buy and sell calls and stuff like that. And I will get some help from some of our best options traders who know strategies really well. And I will have them devise one that makes sense. And we'll put it up there. 1 second. This is what I want to show you. I'm looking at a directional flow in the market. There. Upper end of this downtrend line is 1968. So the stock has 60 points on the short-term basis. 60 points, just like that. If it doesn't do anything, it'll be up 60 points. If it falls, it's going to fall 60 points. That's the short. That's the small range. The wider range is it goes straight. If their earnings are really good, it's going to go straight to it'll be up 150 points. And 150 points on a $1,900 stock is only 7.8%. So price line can be up 7%. 7% itself is 140 points. Or if things are really bad, and you never know, I have no idea. I think the business is very strong, And so the bottom line is you are looking at 1,730. So that's 170 points. So that's the range. But looking at the overall picture of what the stock is doing based on the internals, it's a kind of a tough read because it's moving sideways. But if you look at it yourself, the general direction is higher. That is a very good sign. Okay, that is a very good sign. And because the general direction is sloping higher, the internals are telling us that the bias is to the upside. It's a big money maker. And if you do a straddle, you win hard. Because if the stock's really going to pull one of those, like it normally does, 100 plus 200 type of moves, if you have a put, it's going to go to 0 or lose 60 to 70 to 80% of its value. And your calls will just explode up 100, 200%. But like to remind everyone that options on price line are pricey. So if you do a spread where you sell and gain some premium on the, or if you do a spread strategy, you might be able to save some money. If you just buy a call and a put, it costs a lot. You understand what I'm saying? But it's going to be a big one. And there's lots of other earnings coming out. All right, so let's go. Let's wrap up. Futures are up about a quarter point. That's what I want to see. I want futures to basically chill out a little bit. I don't need some like really crazy stuff going on overnight. See you guys tomorrow. Do spread the word. Love to get referrals. Al, our new member here, was a referral from Nick, and I thank you very much for that. And I'm sure you'll be doing great. And that's it for now. Have a great evening, guys.
Thank you.